In the electrified haze of 2025, where digital fortunes flicker like faulty neon, Bitcoin, the once rebellious cipher of financial sovereignty, finds itself ensnared in an invisible web. Born in the shadow of the 2008 crash as a peer-to-peer antidote to centralized control, its ledger was meant to be democratic, its price a raw pulse of human hope and hubris. Yet today, as trading volumes swell past $100 billion daily, a silent revolution unfolds. Algorithms, powered by artificial intelligence, don't just participate in the market. They orchestrate it. This is the story of how AI is quietly commandeering Bitcoin not through flashy hacks or headlines, but through the relentless grind of code, data, and prediction. Consider the machinery humming beneath the surface. High-frequency trading bots, once the domain of Wall Street's quant wizards, have evolved into AI juggernauts feasting on petabytes of real-time feeds, order books from Binance and Coinbase, sentiment scraped from Reddit and X, macroeconomic whispers from Fed announcements. These aren't crude scripts flipping coins on whims. They're neural networks, descendants of models like GPT and beyond, trained on decades of volatility to anticipate chaos before it crests. On BTSE's platform alone, AI-driven bots now handle over 60% of Bitcoin trades, scanning for patterns invisible to the eye. A subtle uptick in whale wallet movements, a dip in Google Trends for Bitcoin crash. Volatility, Bitcoin's signature sin. Those stomach-lurching swings from $60,000 to $100,000 in weeks once stemmed from human folly. FOMO-fueled retail rushes, panic sells by leveraged speculators. No longer. AI algorithms now tame and amplify it with surgical precision. Machine learning models forecast volatility clusters using Garch extensions fused with reinforcement learning, adjusting positions to exploit micro-fluctuations. In October's choppy seas, as Bitcoin hovered near $113,000 amid gold's 6% plunge, AI agents on platforms like Creole Studio's suite stabilized portfolios by hedging against 24-hour dips, their interventions smoothing what humans might call a bloodbath into a calculated correction. The result? Volatility indices like the Bitcoin Volatility Index, BVOL, have compressed by 22% year over year per CME Group data. Not because the market mellowed, but because machines preempted the madness. This algorithmic grip extends to price discovery itself, the sacred alchemy where bids meet asks to birth value. In Bitcoin's early days, prices bubbled from forum fervor and exchange imbalances, humans haggling in the digital wilds. By 2025, that's folklore. AI dominates order flow. Institutional giants like BlackRock and Fidelity deploy proprietary models that command 40% of spot Bitcoin ETF volumes. Their algorithms optimizing for alpha in tokenized assets. Retail? A footnote. Platforms like Truebit integrate AI for verifiable off-chain computations, ensuring trades execute without trust. Yet the verifiers are Silicon Sentinels, not flesh-and-blood watchdogs. A ScienceDirect study spanning 2012 to 2024 reveals co-movements between AI adoption and Bitcoin pricing, with quantile regressions showing AI's influence strongest in extreme tails, bull runs and crashes where human emotion amplifies noise, but machines distill signal. Today, a tweet from Elon Musk or a SEC whisper might spark a 5% jolt, but it's AI that arbitrages it globally, equalizing prices across 500 exchanges in seconds. The human touch? Diluted to sentiment fodder. Scraped and scored to feed the beast. So, who wields the real reins? Not Satoshi's ghost, nor the cypherpunk faithful. Power consolidates in the shadows of institutions and innovators. Whales, those mythic holders of 1% plus of supply, now arm themselves with AI oracles. MicroStrategy's Michael Saylor boasts of dashboards predicting halvings ripples with 90% fidelity. ETFs, post-2024 approvals, funnel $50 billion into Bitcoin, but their custodians like BlackRock pivot to AI-themed inflows, blending crypto with neural net narratives for hybrid yields. Mining firms? CleanSpark's October 2025 surge shares up 13% signals the pivot. Bitcoin rigs repurposed for AI data centers, merging proof of work with proof of intelligence, controlling hash rate and inference alike. Even decentralized players like B-Squared Network embed Bitcoin collateral in AI agent wallets, enabling micropayments that sidestep volatility. Yet the agents themselves, autonomous traders on Solana and beyond, execute without human veto. Forbes charts this convergence. Crypto as AI's critical fuel, with blockchain securing data flows for models training on market histories. Critics decry the quiet coup. A YouTube deep dive from days ago exposes how these black box algos, opaque as oracles, amplify flash crashes. October's 3% Bitcoin dip traced to synchronized bot sells on misread Fed signals. Regulators scramble. The EU's MiCA framework mandates AI audit trails by 2026, while U.S. bills probe algorithmic collusion. Yet enforcement lags. Cherry Bicart's 2025 Trends Report warns of tokenized assets where AI dictates liquidity, rendering human oversight a relic. On X, traders like at going parabolic rail against the sovereignty slip. Bitcoin maxes forgot what it means they want to control me. As AI agents notch gains amid downturns, Bitcoin endures, its blockchain a testament to resilience. But in 2025, its pulse quickens not to our cheers or cries, but to the hum of hidden circuits. Algorithms don't just trade, they terraform the terrain, volatility their clay, price their canvas. The market? No longer a bazaar of bids, but a boardroom of bots controlled not by kings or crowds, but by the code we conjured. As AI whispers commands to capital, one question echoes. In reclaiming our digital gold, have we forged our own chains? The ledger logs on, impartial and inexorable, waiting for the next hash to reveal the truth.